This is another episode of me documenting the day-to-day process that I'm taking to achieve long-term consistency in the financial market. And we have another red day. So I've continuously dug myself into this deep, deep, deep hole of drawdown ever since I passed the eval on Thursday. But the way that I passed the eval on Thursday was breaking my rules. That led to a system meltdown. Now here we are, 4 trading days later, and I still have not yet to produce a green day. And what I'm working on right now is trying to find out what's going on wrong mechanically with my trading, because the trades that I took today were extremely impulsive and they were extremely early, and I was using the order block. So I've come to realize that there are some drawbacks to using the order block, because it just makes it way too easy for me to get into a trade because it's just a candle. It's not like I'm looking for a gap between candles. It's literally just a candle. So that could be one of the issues. Another thing is I come to the market and I am looking for shorts damn near every single day. If we just scroll through my trade log right here, short, 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 right? And all that happened after the second. It started on the 7th. That's when I started looking for all these sells. And on the second, I had a really, really nice trade that was a short. So I've mentioned this in videos in the past. I do have a tendency to look for the move that has paid me really, really well. Well, ever since that trade on the second, here it was, short. Look how my trading has been. I think 90% of them, I'm looking to be a seller. Like, I have not bought the market in how many trading days? Since the 15th, I have not even tried to buy the market. But for the most part, I've been correct about the bearish bias. So I'm kind of trying to, sit here and figure out, okay, what is going on wrong mechanically? And then aside from that, there's just little things where I'm not able to catch the move that I'm looking for. Like on Friday, I had the sell idea correct and it played out, but I barely got stopped out before it dumped. If we look at the execution from Friday, see if we can find it. Where is it? Where is it? Where is it? Come on. Come on, Tradezilla. All right, it's bricked. Let me refresh it. See if we can find it. Okay, not this trade. The trade before this, I actually do catch the sell, but I barely stop out before it plays out. And then if we go to the following session on Monday or Tuesday of this week, let's go to the short that I ended up taking here, which I did, and I caught it, and it was what I was looking for, and I followed through with my plan. But what happened? Get this volume bullshit out of here. Sold short here, never took anything off, came back, stopped me out for break even. Okay, let's go to Wednesday. Second trade on Wednesday. Sold short here, but got scared out of the position, took off early, and then it played out. So we have 3 trades in the last 4 trading days where I should have made money on a setup, but I did not. And that's kind of the common theme that I'm running into here is I'm framing the correct trade ideas. I'm trading in the right direction. I'm timing these moves. Just somehow, one way or another, I'm not capitalizing on them. And it's really frustrating. And now here I am in the deepest drawdown that I've been in since August. Today, though, today was different. Today was entirely different. There is going to be days where you get the bias entirely incorrect, which was what I did today, and you trade in that direction twice, and you get it wrong twice. So let's get into today and see what happened today. The optimal market approach, how I'm feeling. So coming into the day, I'm thinking 2 things can play out. We can play a continuation down of yesterday, targeting previous day low, assuming market would now move to low the consolidation range, or play a reversal as the market trades into the daily discount wick, assuming Wednesday or today has made the low of week. The range has now been rebalanced and price will move to the all-time high. So you can see that I'm looking at, okay, either we're going to go lower and this is what it's going to do, or it's going to go higher and this is what it's going to do. This was actually what ended up playing out. But I'll explain to you guys why I actually ended up going with the sell idea. So you can see that I'm well aware of the potential for the long there. I just chose not to go with it. And the reason for that was yesterday turned away from the all-time high, came back inside the range to rebalance the impulse swing on Friday, made on Friday through Monday. Price still closes inside the daily BISI, and this is also key right here, so I might as well highlight this as well. This is why I got the bias wrong today. This is why I got the bias incorrect, okay? So all of my high probability biases are going to be framed off of what the daily time frame is doing. The best biases will be in reference to the daily chart and the development of the weekly range. If we look at the daily, how the market's set up before 9:30, this is Wednesday's candle, right? This is the previous daily range. We had a large down candle. Not really large, but we had a down candle. But where did it close? It's still respecting the daily BISI from the daily time frame, and it leaves a large discount wick. Now, if we look at the run up from Friday and Monday, the reason we have dropped Tuesday and Wednesday is to rebalance this impulse swing that we made, because Monday was just a continuation of the move on Friday, never saw a discount. So Tuesday and Wednesday begins to rebalance that, and look what it leaves behind. Now we have Wednesday and Tuesday high uncontested, and the market has traded just up shy of the all-time high, turned back inside the range. Now we've had a retracement offering a discount of the impulse swing made. Wednesday still closes inside the daily gap, indicates it is not going lower, leaves this discount wick. But the reason I was looking for lower prices and ignored that information was because the premium sensitivity formed at consequent encroachment of the daily BISI in the London session, which told me the market potentially wants more downside. And that is why I was looking for lower prices. If we look at the 15-minute, this is that daily gap, right? If we go to the daily time frame, here's the daily gap. Again, price never closed outside of it, closed inside of it, still indicating respect of it. Go to the 15-minute in the London session, what does the market do? Trades right up to the middle of it and then rejects it. But this is not the real move. And you can know whether a move is real or fake based on how it presents itself. Are the candles aggressive? Do they have volume? Are they sudden? Are they large range? Or do they lack volume? Do they lack aggression? And does each candle overlap the previous candle's range? That's the main lesson that I learned from today. If we go down to lessons, I'm learning the difference between low resistance and high resistance liquidity. We did form an intermediate term high in the London session. It showed premium sensitivity at consequent encroachment of the daily BISI, but note the lack of aggression in the bodies of the candles. It's a slow roll lower from there. There's no volume in the candles. And by volume, I mean just how big they are. They aren't thick and full bodied, and each range overlaps the previous, therefore creating low resistance buy side. Contrast this to yesterday. After a buy side raid, the candles have volume and create new obvious premium arrays. Understanding this difference allows me to differentiate between my playbooks. So this move gets overlapped because the candles like volume. It's not sudden, it's not aggressive, it does not form new premium arrays for the market to reject. If we look at the 15-minute, all we have is this right here. We went right over top of that. It's in a discount as well. And then suddenly pre-market, you see the candle start to become animated. So this motivated me to start a new section in my Miro board where I'm basically just noting things, what I have learned about price action. So moving over to reading price action, you can see the difference. I'm just going to drop this in here because today I traded like shit, nothing really much to talk about. But low resistance. Note the lack of aggression in the bodies of the candles. It's a slow roll. There's no volume in the candles. They aren't thick and full-bodied. Each range overlaps the previous, therefore creating low resistance liquidity, meaning it's likely that it's going to overlap that. That's the fake move. Low resistance liquidity is the fake move. It's the manipulation, and you know that it's fake because there's a lack of aggression in the bodies of candles. There's no volume. They aren't thick and full-bodied. High resistance liquidity, meaning the market is not going to overlap. It's going to reject it. There is aggression in the candles. The candles have volume and they create new obvious PD arrays. It creates new obvious order flow the market should respect. Now this is the difference, because yesterday actually ended up rejecting what was put in the overnight session, but today did not. So yesterday did form the high in the London session, and we rejected premium arrays formed from the overnight session. Today we did not. We overlapped that move. So what's the difference? Let's take a look. So you can note that after a buy stop raid, large down candles come in, forming new obvious premium arrays. It's respecting new premium arrays. More large down candles with volume come in. Large down candles form new obvious premium arrays that the market should reject, right? Take the buy side here. Large down candles that come in. Now we have a bearish order block. Now we have a bearish fair value gap. Market trades up, rejects that, produces more aggressive large range down candles that forms a new bearish order block and a new 15-minute bearish fair value gap. But if we look at today, it rejects the daily PD array, but the reaction lacks aggression and volume, right? We have this one down candle, but then what happens after that? We kind of just hang around here. There's no volume in the candles, and we just slowly roll over. And each range overlaps the previous candle's range. This range gets overlapped by this one. This range gets overlapped by this one. You get the idea. So you can see the difference between a real and a fake move, and it's the same thing for one of my other playbooks that I take, but opposite to the downside. So aside from that, the trades that I took today, not really proud of. I wanted to see price trade up first, knock out the trail shorts as it turns away from sell side and gets traders thinking we're bullish. I would like to see it clear out the 6 o'clock highs, but still show respect to the new day opening gap and become trapped in that on the higher time frame 15-minute for sell confirmation. And then again, this is just my tendency to really want to sell the market at 9:30 because you guys know I'm pretty good at doing that, and that's one of the playbooks that I have. And I thought that was present today, but that was not the case. I chose to go with the sell idea, but the sell idea was not valid because it didn't reference the daily chart and the development of the weekly range. Therefore, I traded in the wrong direction today on both the trades that I took. But if we look at both the trades that I took in the recording, you know that part of my plan I was looking for that 9:30 sell, right? I have a really strong tendency to want to sell the market at 9:30. This is the first sell that I take, and I already have top step pulled up because I'm really wanting to sell this thing at 9:30, and I do. So what do I end up selling, and why do I end up selling there? Because as I noted in my plan, right, I'm looking for the market to indicate respect of the new day opening gap, but first I wanted to see it clear out the 6 o'clock highs here. It never even did that. Never did that. 9:30 candle opens, trades up, but closes below the midpoint. Following candle opens, large down candle, violates the open price of that candle. I'm viewing that as a change in state delivery. If this day was bearish, perhaps that would have worked, but it was not. I'm trading in the wrong direction. Therefore, the trade's not worked. So at this point in time, this looks like a good 9:30 sell for me. That typically works. But how does that candle actually end up closing? It ends up closing with a large discount wick, and it stops me out on the following range very fast. So that brings me to my next point. And this also motivated me to do more work about. Okay, my mirror is bricked right now. I can't scroll. Here we go. So I know there's something up with my executions on the order block because if I go to TradeZella and I go to reports and I go to tags and then I go to entry mechanism, look how many trades that I have taken using the order block. But what is my net P&L trading the order block? Well, I'm down, right? I'm in the negative trading the order block. So I did a little bit. Let me look at my win percentage trading the order block. So I did some study. Look how many short trades. I'm just noticing this. I didn't even see this before. Look how many short trades I've taken using the order block. It is heavily biased to the downside, selling the order block. So this right here literally shows my tendency to want to sell the market and just hunt that sell. That's definitely a problem of mine that I have and I need to work on. So there's a mechanical issue right there, right? I favor sells, and the order block allows me to impulsively jump in on these sells without the idea ever really even being confirmed, which is what happened today. But just a quick glance at the report from the PD arrays that I use to execute. I'm using the order block a lot, and I'm not profitable with it. But compare that to something like the inversion fair value gap, where I have 10 trades taken with the inversion fair value gap. The net P&L on inversion fair value gap trades that I take is 14R. With a win rate of 40%. So I'm trying to dial in on, okay, why am I going wrong with the order block? And that's what I've done here. So my problem using it is I don't actually know how to use it. I'm not executing high probability order blocks, and I struggle picking the right one. I'm very quick to execute the change of the state delivery before it's ever there. And the order block makes it very easy to trade in the wrong direction, especially when I'm bearish, because it's just a candle. Like it's literally just a candle. So the drawback of the order block is it makes setups very available because, like I said, it's just a candle. So it's so easy to execute premature and trade in the wrong direction. So a new rule that I'm going to move with going forward is I have to wait for 1 minute candle to close to confirm the setup because, like I showed you in the recording today, I didn't wait for that candle to close. But had I done so, the sell is never ever valid at all. And then the following trade that I take is also just abysmal. Just trading in the wrong direction using the order block. So here you go again, right? Wanting to put risk on before that candle even closes. Trying to sell this thing. I'm backing off right there. And where does it actually end up closing? There, and then I sell it. Like, what am I doing here? This is not a good trade at all. We've just gone straight higher from 930. There's nothing that the market's rejecting here. Like, I see no indication or respect of a premium array. It's just trading up into, I believe it was the 6 o'clock highs here that I had marked out here, right? My plan, I wanted to see the market reject that. So we trade up into it, and we have literally just put in a down candle, and I'm selling that. So trading the order block trading makes it really easy for me to trade on the wrong side of the market. As you can see here, I mean, there's just literally one down candle, and I'm selling that. This isn't even an order block. It's not even a valid order block. What I've noted a valid order block is it removes liquidity from the marketplace, or it is in reference to and indicates respect of a PD array. The same thing goes for the inversion fair value gap. This is what makes a high probability inversion fair value gap and a high probability order block. But you don't see either of those here. I mean, this is not even an order block. It never was. It just was painting as a bold-faced down-closed candle, which made me want to sell it. Here is literally just one down candle. Like, what? Come on. Come on, dude. Come on. So, there's flaws in my executions, obviously. I mean, I'm taking trades extremely prematurely. For the most part, I'm getting the bias correct. And you guys know that my analysis is pretty spot on. 75, probably more like 60% now. 60-75% of the time I'm getting the bias correct and I'm trading in the right direction, but I'm just not able to capitalize on that move. There's going to be days like today where I get the bias completely and utterly incorrect, but that's fine. One thing I will note that I did about today, though, was typically when I get the bias incorrect like this, man, I feel like shit, and I'm just so upset with the fact that I got it wrong and the market traded in the completely opposite direction that I did. Well, today I was completely accepting of that, and I locked myself out of the top step account so that I could not take a third trade because if we look at my intraday journal, and of course, it's in TradeZella. We'll see how I was feeling and thinking after the second loss. Some entries are way too early, and the order block lets me do that. See, I'm noting the problem right here. I can feel it. I can literally feel it. Get a sense of, okay, this is not good. This is not right at all. So I note the days that I'm looking for sells. I'm so quick to sell the order block, and I want to try it again, but at this point in time, it looks like it's just a straight up day. We're just going higher, and I've got the bias incorrect. So that's at 9:45 after I take the second loss. I want to try it again, right? So I can feel myself wanting to stick around and try to sell the market again, even though I know it's clearly bullish. My bias is absolutely and utterly incorrect. So what do? Admit that I've wrong. Admit that I've got it wrong. Just be done. Okay, took 2 losing trades. I'm in extreme drawdown right now. I don't have the room. I can't afford to lose for a third time. So what I do is I just lock myself out, which is a good feature. I used it for the first time today and yesterday because, I mean, I really have to protect my downside now. I got to be in defense mode. I'm in a lot of drawdown. I take away the rebuild from June 2025. I mean, this is some serious shit, right? And I dropped really fast, and it's taken me a couple of days to do it's taken me 3 trading days to do half of what I lost on Friday. So Friday I was just completely not respecting the risk, and the reason for that was because of the way that I traded on Thursday, and it was just not respecting the risk in these new volatile conditions that we had last week. This week, not really the case. Volatility's kind of settled back down. But I broke my rules and then paid for it the following day. And now here we are. This should have been a green day. 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 Like I'm telling you, I am getting the bias right with a high degree of accuracy, and I'm not able to execute on these moves one way or another. So I'm trying to pinpoint, okay, like what is the primary reason behind all these, and why do I keep digging myself into a deeper hollow drawdown? So went from equity I have 3K down to 2.1. My win rate has just gotten slaughtered. I mean, it's just dropping fast like a fucking rock, right? So obviously I got a lot of work to do. I'm in the hole right now, but you know, there's a fire under my ass, and I'm trying to figure out, okay, where am I going wrong? But the thing is there's always fires to put out. I mean, you're never going to be trading perfect. You're never going to be doing everything and absolutely correct, right? There's always going to be little things that slip through the crack. Then if you don't identify them and address them quickly enough, well, then it leads to shit like this, where now here I am in a deep hole. But the thing is I haven't been trading as good as I thought I was this month. I mean, if you look at the monthly P&L in terms of R multiple, which is what I should be focused on, that's another point that I'm going to make, is I've been focused on dollar amount, right? Because I finally passed the eval. I came close to passing it. I finally did pass it. and now I'm on the XFA. Now, if you go back to my old videos, you'll see that everything that I do is in terms of R multiple, and I would literally say, we don't focus on the money, focus on R multiple. But now that's switched back to dollar amount, and I'm not even looking at R multiple. So gotta switch that back, because this really reveals how I actually am trading. I'm at an equity high on the 16th of October, or I made a high in my daily net cumulative P&L in terms of R multiple on the 16th here, and it took a fat dive from there. So gotta take a step back. But the fire out. I mean, look at the volatility of my P&L. Week 1, 8R. Week 2, 5R. Down 5R. Week 3, 4R. Week 4, down 4R. So it's just red, green, red, green, red, green. And I'm not really as profitable as I thought I was. Still a lot of things that I need to work on. Still a lot of fires to put out. But you better believe that I'll identify them. And I will fix them. Because, I mean, I got to. I want to make this shit work. I'm going to sit here and figure out my problems, or I'm just going to, act like nothing's going wrong and just keep trading and hope for the best, because it's obviously not the case if I do this. This is an indication something has to change. That's it. But not change entirely. I mean, it's just, small mechanical errors that need to be fixed. So, I think that's going to be about it for this one. Don't really have anything else to talk about besides the fact that just have problems to put out, fires to put out. So that's it for this one. I'll talk to you guys tomorrow.